Hello, ladies and gentlemen. This is Amena Bakr, Chief OPEC Correspondent from the Future Investment Conference in Riyadh. And I'm joined by Dr. Yousef YAlshammari. He's a consultant at Imperial College London. Dr. Yousef, thank you so much for joining us. A lot is happening in the Middle East region at the moment. We are seeing the conflict between Israel and Palestine really spike up the oil price. In fact, many people are saying that there's a $4 or $5 geopolitical premium. How do you assess this geopolitical premium, and where do we go from here?
Thanks, Amina, for having me. I think there has been a kind of a marginal geopolitical risk premium so far. We've seen Brent going up from $85 to around $90 trading, but just before the war, that was around the $97. And that is due to the concerns about the market tightness. So I think there is definitely a geopolitical risk premium, but it's not that high yet. It doesn't mean that it cannot go higher than that, because as the uncertainty here, I would say, uncertainty continues to rise, then you would see speculators taking more dominant role. We don't know what OPEC Plus is if they're going to make any changes to their policy at end of November next month. So I believe the situation continues to be volatile, and the issue here is that OPEC has done a very good job in 2023 trying to stabilize markets, and that is the last thing is that we see a kind of an escalation due to, for example, concerns about security of supply coming from the Middle East, especially with as you know, the Israeli-Palestinian conflicts here it can be an issue. But so far, I believe the market is somehow watching and continues to be having a marginal volatility, but it doesn't mean that can last. One important aspect here is if central banks continue to increase the interest rates, if OPEC Plus, if they see, for example, a marginal or increase in the prices as we move, for example, from now until November, then we could see, for example, Russia and Saudi Arabia taking a different view on the voluntary cuts. And I believe they can definitely stabilize the markets, but the geopolitical risk premium will stay, even if we see a kind of a change or a rethink in OPEC Plus policy or the voluntary cuts that we have been seeing in 2023.
Dr. Yousef, we've been seeing that OPEC really reacts on a precautionary measure, and we've heard this from His Highness Prince Abdulaziz. He always says, "I'll believe it when I see it," and he's talking about demand here. Do you really think that the current environment with so many uncertainties would prompt OPEC Plus to change their policy? And I'm talking about the November 26th meeting.
Well, I don't think there should be any change at this time. Well, they have been calm, they have been resilient, and if you look at the volatility, because their most concern is to keep volatility to its minimum levels. So I think if they react too quickly, then that can backfire. So I think the most feasible scenario, in my view now, is to stick to whatever they have been planning, because the market is not really undersupplied. As His Royal Highness said, he believes it when he sees it, which is definitely a feasible strategy. But I think they'll continue to be worried about, as is just mentioned, the economic outlook. Even if we see a speculation or geopolitical risk premium raising the markets, I think they would really look at the physical market. And the physical market currently is kind of supplied. Stocks are at reasonable levels. So I think that's the scenario is they will keep they act only when they see a significant growth in demand, and I believe that could happen at some point in 2024 when central banks try to cut interest rate to boost oil demand. Then maybe around summer we see a continued decline in stocks, especially from US, from OECD, and then I think really OPEC could think to ease the cuts, especially here we have different layers of cuts, by the way. The Saudi-Russian voluntary and the 9 member countries voluntary cuts and the OPEC Plus cuts. So I think we'll see different gradual easing of these different layers as we move from now until 2024.
One thing that always comes up is the politicization of oil. And we have U.S. elections coming up. Do you think the U.S. has the leverage to ask Saudi Arabia or any other OPEC Plus member to raise its production in order to ease prices?
Well, we have seen these kind of requests back in 2022, if you remember, October, during the midterm elections. If you remember, there was a press release from the Saudi government that OPEC Plus decisions are technical, and they definitely wouldn't want to use any of these decisions for political interest. But then also we have seen a change in the way the U.S. administration reacts to OPEC Plus decisions. We've seen them many times welcoming decisions. Sometimes they don't, if they say, for example, this is not the right time to cut. But we have not really seen a request to postpone, cut, or increase production since October. I believe there has been better understanding between OPEC Plus, especially here between Saudi Arabia and the U.S. And that even there has been better dialogue. And the challenge was actually after the Russian-Ukrainian war. We started to have some sort of, we've seen it, that OPEC Plus is siding with Russia, or siding with consuming countries. So I think there has been much better dialogue. And I don't expect a similar request to the one we saw in 2022 happening next year. One thing also, because I believe the $90 kind of price range is somehow acceptable for U.S. consumers. If you look at the consumer, the price or the data on oil, on gasoline demand, they continue to be somehow above the 9 million barrel. So it has not really been affected by the $90. So I believe the concern for high prices, when does it come a concern for the U.S. government? When we see $100+. And then we could see, for example, whether that happens through the media or from any other channels. But I believe even for OPEC Plus, they wouldn't want to see these prices becoming too high for consumers to search for alternatives. And I think here they'll be mainly concerned about Asian consumers, India, China. Of course, the investments in the alternative source of energy, we're already having major shortages in the upstream sector. So I believe it is also in their interest to keep prices reasonably in a good level so that they keep the market healthy.